The Great Depression, caused by a massive stock crash and over-leveraged banks. This happened when Warren was just a child. He grew up in a world stricken with poverty. He had just missed the wild, roaring 20s, but Warren learned quickly the value of money and just how much your life can be ruined if you spend frivolously. As a young boy, he learned about frugality, a lesson that he would carry into his 90s. He learned a lot of valuable lessons from the Great Depression, which are don't be greedy, don't be over-leveraged, and most importantly, always hate debt and love value. World War II recession. This was directly after the US economy had transitioned into a full wartime economy, but due to the sudden drop in military spending and the massive influx of soldiers demanding jobs, a recession hit hard. Warren was a teenager in this time and delivered newspapers and invested in his first stock ever called City Services. He learned quickly that he would need to start small and avoid the greed of massive gains. Along with that, he realized that starting early was key and that his youthful investments would be massive later. Finally, he learned not to wait for the perfect market. Find value whenever you can. The 1953 recession was caused by inflation, defense cuts, and inventory corrections. And this was an important time for Buffett. He was just graduating from Columbia and was taught by one of the most influential investors in history, Benjamin Graham. Graham was behind the now legendary book, The Intelligent Investor, a book that outlined value investing. And you too can start value investing by subscribing to this channel. This is when Warren learned about looking for stocks with good value relative to their stock price, which would result in the creation of the legendary Cigar-Butt Strategy, of which I have a full video linked below. But simply put, a cigar butt may be almost over, but it still has a few valuable puffs left inside. Warren would find companies with undervalued stock prices compared to their overall asset value. So a company may be worth $45, but its asset value is $65. Simply put, small contractions can give big value discounts. The Vietnam recession was caused due to wartime spending and inflation. The market was becoming highly speculative and real value was hard to come by. At this time, Warren was around 40 years old and he had seen the many mistakes that others make in highly speculative markets. His answer? Completely shutting down the Buffett partnership. Indeed, Warren would take out a lot of cash from the market. He played it safe and ultimately avoided the crash. He sat out of the madness of the market. Warren won by realizing if you don't understand or believe in the market, it's okay to sit on cash. Invest in saner waters. The Watergate crash of '74 wasn't just about the scandal. It was due to several factors, including the oil embargo, stagflation, and overall massive uncertainty. But this time, Buffett was ready with massive reserves of cash on hand. He decided to buy as soon as the crash happened. He bought heavily into the Washington Post, Geico, and other companies. The result was massive gains down the road. Warren won in this crash by being fearless. When it's bleak, buy, buy, buy. Fear equals discounts. Black Monday is a legendary crash where the entire market dropped by 22% in one day. Basically, this was caused by automated trading and panic sellers fearing that the prices were too high and that the market would surely crash soon. This crash was even featured in the film The Wolf of Wall Street. But this time, Warren was a trading veteran and a rugged, strong investor. What was his answer to the fear? Buy. He said it was a fire sale. He bought stocks like crazy as soon as they crashed. He made out big in the rebound, which followed soon after. Remember, panic sellers are your best friends. The 1990 recession was a time when the savings and loans crisis was hitting America hard. Along with that, the rising oil prices caused massive issues for many Americans. This was a time when Warren was about 60 years old and was quite used to the overall financial ups and downs of the world markets. This time, Warren chose a simple factor to follow to get through all of this: the fundamentals. People will always trade with the fear of losing their money, not Warren. He has hearts of iron 4 times stronger than any regular investor. Simply, when the headlines scream collapse, read the balance sheet. .com bubble and crash. Now we all know about this one. This was right after the advent of the internet and the subsequent hype that came with many websites when everyone decided to invest in digital. Many brilliant companies were born in this time, like Google, Amazon, and eBay. But this all came to a screeching halt in the early 2000s. This was a time when Warren was a bit long in the tooth but understood the game better than Pat Mahomes with 13 seconds left to win. Warren said he didn't understand tech and avoided it. He was mocked for his fear, but he was able to preserve capital while everyone got wiped out. And once again, he bought stocks for bargain prices. Basically, you don't need to swing at every pitch. If it doesn't look right, don't fall for the FOMO. 2008 housing bubble crash. This is one that most of us have lived through and remember. This crash shook society to its core and caused a multi-year recession, the effects of which we still feel in some ways. This crash was caused by a massive over-leveraged housing market. And if you want to understand it better, just check out this masterpiece of a film called The Big Short. It's all about about this crash. Now, after this crash, Warren had a lot of cash, and when there's blood in the streets and you have cash, you name the price. He bought massively into Goldman Sachs and Bank of America. Basically, the man was a straight up gangster and addicted to the game, and essentially helped save the entire country. Now, the 2020s market decline has been interesting as we haven't seen a full-on crash or recession in the regular sense. You see, the markets are being propped up by government spending and rich people buying stocks, while average people are struggling to pay rent. We're likely living in a massive bubble, and Warren is playing the market exactly that way. He has withdrawn over $300 billion in cash and is sitting on that money waiting for the market to collapse as we find ourselves in speculative, fearful times. And fun fact, Warren owns 5% of the US Treasury because of this, which is more than even the Fed owns. But people have praised Warren and have taken his moves seriously. But will Warren hit another home run? Only time will tell. I love you.